good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're taking a look at some first quarter results across the manufacturing sector. We're looking at Trinidad Cement Limited as well as National Flour Mills, or NFM. Now, both groups have reported somewhat mixed results, albeit on the back of overall lower revenues for both groups. Let's take a look at what those results look like and what investors might expect in the coming months ahead. Turning firstly to Trinidad Cement Limited, or TCL. For that first quarter of 2026, the group would have reported an earnings per share figure of 20 cents, which was a 14% increase from the 17 cents per share reported in that prior comparable period of 2025. Now, revenues were down, as mentioned, 1.1% from 626 odd million to just about $620 million. Gross profits, however, did improve 13 odd percent from that $222 million mark to just about $250 million. Operating earnings overall improved 8.1% from 129 to just under 140 million. Overall net income attributable to controlling interest increased that 14 odd percent from 63.8 million in that first quarter of 2025 to 73 million in the first quarter of 2026. Now, when we take a look at the revenue story for TCL, we can see that it is primarily dominated by cement production and sales, with that in that greener segment, fairly flat over the comparable quarter, as mentioned, falling from just about $610 million to $609 million, while we can see that concrete production or concrete sales, or sales from concrete, or revenue from concrete rather, would have fallen from 17 million to 11 million. Now, importantly, TCL would have announced the closure of its ready-mix operations effective March 31st, 2026, which means that going forward, their primary focus will continue to be on cement production and sales, which should lead to some one-off costs in the medium term or the next couple of quarters as that subsidiary is closed, with perhaps improved margins over subsequent quarters. Speaking of margins, we can see that TCL's margins did improve over the comparable quarters from 2025 to 2026, with gross profit margins actually improving from 35.4% in that tealish color to 40.5%. Operating profit margin also improved from 20.7% to 22.6%, while profit before tax margin also improved from 19.8% to 21.6%. What does that mean for shareholders? Well, it means for every dollar of revenue generated, of course, TCL is managing at this point in time to convert that into more dollars in terms of profits for shareholders and investors alike. Now, at a price of $1.80 per share, TCL is trading at a price earnings ratio of 18.6 times, which is above the sector average of 12.9 times, and offers investors a dividend yield. Well, this is actually a type which should be around 6.7%, which is slightly below the sector average of 9.7%. So, on the basis of relatively stable revenues, although marginally lower for the comparable quarters, but improving margins and keeping an eye on those elevated valuations, Bourse is going to maintain a market weight rating on TCL for the time being with a stable outlook. Turning very quickly to NFM, or National Flour Mills, for its first quarter of 2026, the group reported an earnings per share figure of 9 cents per share, which was a 21.7 odd percent decrease from the 12 cents reported in that prior comparable period. Now, like TCL, we saw a decline in revenue for NFM of 2.8% from 129 million to just under $126 million over the comparable quarters. Gross profits actually improved marginally from 41.2 to 41.9 million. Ultimately, however, profits after tax did fall at 21.7% from 13.6 to 10.7 million, primarily on a fairly significant increase in selling and distribution costs, which would have been built into other operating expenses. When we take a look at the revenue trends for NFM over the past few quarters, we can see it has been somewhat of a bumpy ride. After a 20% increase in that first quarter of 2023, it has bounced between decreases and increases over the past few comparable quarters, down 10.3% in the first quarter of 2024, marginal gain in 2025 of 1.9%, and that now a 2.8% decrease over 2025 in that most recently concluded quarter. NFM's profit margins remain somewhat mixed. We can see that there was generally an increase in the gross profit margin from 31.8 to 33.3%. However, operating profits and profit before tax margins declined from 13.2 and 13% respectively to just over the 12% mark, 12.1% in fact, on both counts for operating profit and profit before tax. So at the price of $1.54, NFM rather is trading at a price earnings ratio of 4.7 times, which is well below the sector average of 12.9 times, and offers investors a dividend yield of 7.8%, slightly below the sector average of 9.7%. So with those improving cost efficiencies in mind, lower revenues, however, and that higher taxation expense, as well as global economic uncertainties, Bourse is maintaining a market-wide rating on NFM for the time being with a watch outlook. Well, that's it for this week's edition. For more information, you can give us a call at 226-8773 or to Bourse. Email us at info@boursefinancial.com. And of course, you can check out our website where all of our research is absolutely free at bourseinvestment.com. And you can catch this article in today's business section of the Trinidad and Tobago Guardian newspaper. So until next time, stay safe, happy investing, and we'll see you again on the Bourse Report.